Hi, thanks so much for tuning in. My name is Alex Matthew and we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. Now, I was speaking to a young investor in the newsroom, 25 years old, and they've just started investing. Maybe about 7 months back, they've started SIPs. And what they were saying or asking was very interesting because they said, Alex, I've been investing diligently for the last 7 months, but then my SIPs are losing money. I'm not making money. What should I do? Should I stop my SIPs? And I thought that this was a very important question to address on the show because so many of you will have started SIPs over the course of the last few months, and because market conditions have not been very favorable, it's possible that you are losing money at this juncture. What should your response be? And why is it that people say that you should keep your SIPs going? To talk about this, I'm joined by Vijai Mantri, who is an investment expert and who's seen many of these cycles and who is the best person placed to give you the advice that you need. Vijay, thanks so much as always for taking the time.
Thank you very much, Alex, and thank you very much for inviting.
No, so let's start with that. And I think it's always interesting when you speak to people who've just started their investment journey because the insights that you get from them are always useful to take into account. First of all, are you surprised by that question? That my SIP is not doing much, it's not, in fact, it's losing money. Should I stop it right now?
No, I'm not at all surprised because this is what we are witnessing. And a few days back, I tweeted that for SIP, December discontinuation or stoppage numbers are looking bad, but January number would look much worse. And that would lead many people to figuring out what they should be doing. And perhaps Feb, March may look bad. So this is a natural phenomena. And that is why the need of hand holding is needed. It's just not the question of knowledge. It is the ability to execute. And execution when things don't go as per your expectation. So in SIP, we have seen multiple times the SIP has not delivered return, be it right now or be it in 2020 or 2008 or year 2000. We have enough data to prove that uh, uh, actually when the NAV drops and SIP don't show return, then many investors discontinue their SIP and perhaps at the wrong time.
Some people who are hearing this will be saying, Vijay ji, क्या बोल रहे हो? 26,459 crore का gross SIP inflow है December में. How are you saying that cancellation is more? Can you explain why you're saying that?
So very interestingly, if you look at total new SIP registered in the month of December, and you look at total SIP which got discontinued, the ratio is 80% plus. It means that of all the total new SIP which has come, the SIP which has discontinued is more than 80%. So this is a very worrying number. And net addition to total SIPs, new SIP were more than 50 lakh. But net addition is just below 10 lakh number of SIP. There's a one way to look at it. Another way to look at it is that total number of cancellation, how much they are as a percentage of total outstanding SIP. Even that number is more than 4% right now. It is generally happen around 2%, but right now it is 4%. So it is a phase of the market where we have gone through this phase multiple times, and this is a very natural progression of investor when they don't see return on the portfolio to look at whether they should continue or discontinue their SIP. So I think we'll perhaps answer this question in next 10-15 minutes.
In fact, let's talk about these two instances because when I discussed this with you, you said that there are two instances where it can be spelled out with data why discontinuing an SIP is not the best idea. In fact, it's the worst idea. And you can actually get a lot of benefits by continuing it when the chips are down. Let's start with the first instance. You've shared data with me about the Aditya Birla Sun Life Digital India Fund, which was launched on the 1st of March 2000. And you've given me data for an SIP of 10,000 rupees per month. Can you take me through the numbers and why is it that you chose this?
So first of all, let me clarify, this fund was not launched by Aditya Birla Sun Life Mutual Fund. It was launched by Alliance, and at that time the fund was called Alliance New Millennium. And Aditya Birla Mutual Fund bought this fund much later. So this fund was launched in 1999. The fund NAV went up to the extent of 18 rupees. Then the fund's NAV dropped to 2 rupees. So almost like 85% kind of drawdown or correction in the NAV. We are talking about a fund and a category where we have seen both boom and bust. So we're talking about year 2000, we're talking about sectoral fund, we're talking about IT fund. So if you look at Birla Sun Life Digital Fund, the NAV on 1st March 2000 was like 15 rupees 72 paisa around that number. And after 20th month on 1st October 2001, funds NAV dropped from 15 rupees plus to below 3 rupees. So in a 20-month period, the fund NAV dropped more than 80%. So your 2 lakh rupees, we invested 10,000 rupees per month. In a 20-month, you invested 2 lakh rupees and the value is 80,000 plus. So the NAV has dropped more than 80%, but the SIP number has dropped around 56, 57%. That is a number the viewer will see on the screen. But you didn't worry, you continue to keep investing in your SIP. By the time 44th month, the fund NAV start going up from 2 rupees 45 paisa to more than 5 rupees. So at 44th month, that is October 2023, you already invested 4,44,000 rupees in 44 months, but your value of portfolio has gone up substantially from 4,40,000 to much higher number. And what we have seen, your starting NAV was 15 rupees 75 paisa. And in October 2003, when your SIP total portfolio value went into positive territory, the NAV of that particular fund is still below 6 rupees. So what does it mean that? The NAV from the top is still down significantly, but you are 12% plus in your SIP portfolio. Because in SIP, you kept investing when the NAV was down. And when NAV goes down, most of us focus only on NAV. But the flip side of that is when NAV goes down, the number of unit goes up substantially. Even in this illustration, if you see, when NAV was 15 rupees 72 paisa, you got certain number of units. When NAV went down to 2 rupees 45 paisa, the NAV corrected more than 80%. But the number of units which you went up acquiring at 2 rupees 45 paisa has gone up more than 6 times. So that is the power of accumulating when the units are values lower, because you end up acquiring more and more units. And please consider these are two kind of worker. The NAV shows the productivity of the worker, and the unit shows number of worker. So when SIP NAV goes down, the productivity goes down, but the number of workers goes up. And when the NAV start increasing, the number of workers already went up because you bought at lower level, and the productivity goes up. With the NAV goes up, you end up creating more wealth for yourself. So this is, we have seen in one of the worst drawdown we have seen, one of the worst drawdown we've seen in a sectoral fund in a boom and bust scenario. And if you continue to SIP journey even in that fund, so from 1st March 2020 till 1st January 2025, there were around 200 and around 290 months. You invested approximately 30 lakh rupees, and the value of portfolio is more than 3 crore 84 lakh rupees. So your portfolio is up 13, 14 times. So
Yeah.
that is the value of investing, is staying disciplined and buying more units when the NAV is down.
Yeah, in fact, you would have hit that 1 crore mark in Feb of 2020, or maybe a little bit before that. And what a beautiful figure this is, and what a beautiful story as well, right? But what it also shows me...
And Alex,
yeah.
just one more important thing I would like to highlight. Suppose you see the starting NAV is 1572.
Yeah.
And the NAV in 1st January 2025 is more than 180 rupees. So there's a 12 to 13 time growth in NAV.
Yeah.
So suppose somebody invested this 30 lakh rupees on 1st March year 2000, the value would have been around 1 crore, around same number, 3 crore 60 lakh, 3 crore 70 lakh rupees. But somebody done the same amount through SIP over a last 25, 24, 25 years, then the portfolio value is same. And the average investment period has been not 25 year, but 12 and a half year because you're investing 10,000 rupees every month. That is the power of SIP.
Yeah.
When the NAV is down, you end up acquiring more units. So your average cost went down substantially.
In fact, this is exactly what plays out in the Taurus Infrastructure Fund that you've also shared with us. 1st of Jan 2008, the NAV is 17.5. You've again talked about a 10,000 rupee SIP, at which point in the first year you've accumulated 570 units, which I'm just running through this because both of them have a similar story. 1st of December 2008, when the financial crisis is hit and the infrastructure story in India starts seeing cracks, you have the NAV falling to 5.2. It fell to further 5.02 in March 2009. And in each of those instances, like Vijay said, as the NAV starts falling, you're accumulating more units because your SIP is the same. And here, Vijay, in both of these instances, we're talking about keeping an SIP stable at 10,000 rupees per month. We're not even talking about a step-up SIP, which is even more powerful, which allows you to accumulate more units. But the most important point, according to me, in both these instances, is the power of time. If you give it enough time, you're able to navigate cycles and make the best of both, right? So why is it, according to you, most important to give it time?
Time, see, the time will reduce the volatility completely. So though haven't shared the detail with you, but I've just running through the number. So I'll just give a very simple illustration. HDFC Flexi Cap Fund. That fund got launched 30 years back. If somebody picked the lowest NAV of that fund in every month, or somebody who picked the highest NAV of that fund in every month, then somebody did SIP on the first of every month. The person who did bought at the highest NAV, their XIRR is 21.1%. Person who bought on first of every month, the XIRR is 21.3%. Person who bought on the lowest NAV of every month, the XIRR is 21.5%. So hardly any difference. The difference of 21% compounding happened 30 years. If you do similar thing, forget about every month. Suppose the same 1,20,000 rupees, which you do 10,000 rupees per month over a 12 month, 1,20,000 you invested on the highest NAV of every financial year or highest NAV of lowest NAV of every financial year. Then somebody who bought at the lowest NAV of every financial year, their XIRR is 20.3%. Somebody who bought at the lowest NAV every year, their XIRR is 22.2%. And somebody who did 10,000 with SIP is 21.3%. So timing doesn't matter. The 20% magic happened because of the holding period is 30 years. And particularly in that fund has also seen NAV falling more than 10% every 6 months, more than 20% almost every year, more than 30% every 3 to 4 years, and more than 50% at least 3 times in last 30 years. And after that, this fund has created this kind of wealth. So if anybody is investing in equity and doesn't want to see volatility and downside risk on the portfolio, perhaps I'm fear they're not able to accumulate wealth.
Yeah, and it's not. This is not the asset class for them, because if they only want to see a linear move upward, then fixed income is what you look for, because ultimately an equity market is going to give you periods of downturn. It's not a singular move upwards. But just to drive home the point, okay, we're talking about periods of underperformance and outperformance for schemes and for categories. But at some point, Vijay, we also have to admit that maybe certain strategies and maybe certain fund managers are not pulling their weight, right? So if it is a case of significant underperformance, at that point, obviously you're talking about switching an SIP and you're not stopping an SIP. When do you take that call that this scheme or this fund manager is not working for me? When do I switch?
So there are two ways to look at it, and I think you need to give minimum 3 to 5 year period to judge a fund manager. Number one, is that fund manager over a 3 to 5 year period able to outperform the benchmark? If the answer is yes, you don't need to change anything. If the fund manager is able to deliver above average return than the category average, You don't need to change anything. If the fund manager is delivering return which is below category average and also performing the underlying benchmark, then definitely you need to take money out and go to a better fund with more consistent investment performance. But just do not look at the fund deliver with the highest return in last one or last two or last 3 years. I have seen many investors either going by the highest rated fund by some rating agencies or the fund which deliver highest return in last 1 to 2 3 years. And why I'm saying highest rated fund by rating agencies, because these rating agencies do rate the fund, but none of them tell back to investor what is the investment performance of fund which they've rated 1 year back, 3 years back, 5 years back, or 10 years back. There's no look back of their track record. Though they judge the track record of fund manager, but there's very ironic, there's no look back at their own track record.
It's an interesting point that you make, Vijay, and certainly something to think about. Thank you so much, as always, for joining me, and insightful conversation as always.
My pleasure, Alex.
All right, so this should help you understand why you should not stop your systematic investment plan into an equity mutual fund scheme. Now, the second leg of this conversation today is what I like to call Wellness Wednesday. And you're probably wondering why we're talking about this on a personal finance show. And the answer is very simple. We tell you how to make money through the week, but we also want you to stay both mentally as well as physically healthy. Because what's the point if you're not mentally and physically healthy? What's the point of all the money? Today, I'd like to talk about a prevailing trend, something that a lot of young people are complaining about, and that is work stress, work anxiety. Is there a difference between the two? How do you learn? How do you understand if you are experiencing it? And what should your response be? I'm joined today by Shreya Manot, who is a clinical psychologist. Shreya, thanks so much for taking the time, and appreciate it. Let's talk about this. Are more people coming to you now, young working professionals, are they coming to you and saying that they have work anxiety? And how do you understand as a psychologist whether this is being experienced?
Right. So definitely there's been an increase in the number of individuals, especially, the younger population, wherein they come in, they report of experiencing stress and anxiety. Some of them are experiencing symptoms of burnout. And there are some telltale signs of anxiety, stress, and burnout at the workplace. Although sometimes we might just kind of, brush it off for just a daily happening. Now, when we're talking about how do we identify individuals if they're having anxiety or stress at the workplace, there are several symptoms that one can observe, right? Let's begin by talking about some mental or emotional symptoms that an individual might be experiencing. Say, for example, worrying a lot, having a lot of racing thoughts, ruminating over things, feeling helpless or hopeless, not feeling motivated enough to do work. These could be some of the mental and emotional signs that one is experiencing, stress or anxiety at the workplace. There could be some physical symptoms that an individual might experience. Say, for example, rapid heart rate, rapid or shallow breathing, palpitations, which sometimes go uncontrolled for an individual. There could be sweaty palms. There could be a startled reflex reaction that we see in individuals. There are different kinds of body aches that suddenly start developing. And the third category of symptoms that help us identify stress or stress or anxiety at the workplace will include behavioral symptoms, right? Feeling less interested in things that you were interested in, changes in sleep pattern, changes in appetite, not feeling like completing the daily tasks in the same level of efficiency and functioning that you would in general. So these are some of the symptoms that help us identify if an individual might be experiencing stress or anxiety at the workplace. This is for the individual to understand themselves, but for further information, it's always nice to go to a professional or seek out some advice to be sure.
So I find that some of the psychosomatic responses to stress and to anxiety that you pointed out are quite common. And so therefore, if you are having a recurring headache, for example, how do you differentiate? That's the thing, right? How do you understand that the root cause of this is stress at the workplace, or it's anxiety at the workplace? Is there something that you can suggest that people can think about?
Yeah, this is really interesting, what you're asking, because recurring headaches could mean several things, right? So the first step is to always rule out for any physical causal factor that is there. We try to check if there's something that's causing this particular psychosomatic symptom. And when we figure that there's nothing that's physically like going on in the body is when we try to also think about anxiety or stress. Now, particularly talking about workplace anxiety, it's very important for us to understand that anxiety can be of several kinds. There can be generalized anxiety, there can be social anxiety, there can be illness anxiety. Now, talking about workplace anxiety, it's very important for us to understand that there are some factors that can help us understand if my anxiety and stress is specific to the workplace. Say, for example, I feel fine on my off days. I'm doing absolutely fine. There are no headaches. There are no psychosomatic symptoms. I'm functioning pretty fine. Number two, it could also be that, say, for example, I'm working from Monday to Friday. So there is this intense sense of panic, anxiety, overwhelmed feeling, increase in my physical symptoms as the weekend is approaching. Because there is so much exhaustion that is there for an individual that they are not able to understand what to do on the weekend. Number three, we start noticing some behavioral changes also, wherein interacting with individuals, say for example at the workplace, might feel a little draining sometimes when we're experiencing some of the stressors, which has nothing to do with the individuals per se, but this is my reduced bandwidth at this point in time, right? But when I'm interacting with others outside of the workplace, it can just be very normal functioning. So sometimes we're able to like differentiate when these symptoms are particularly there with respect to work and they're not there in general. So I think that can help individuals understand if this is specific to the workplace or if this is something more physical or more generalized.
This is a very important conversation, Shreya, to have, because if I think about it and if I speak to an older generation, perhaps, they will say that they probably experienced this, but they never gave it too much thought. The fact that we're talking about this now is that people are becoming much more aware of the implications that this might have related to, say, blood pressure or related to hypertension and various other things that can have knock-on effects. So how do you solve this? How do you work towards either mitigating it or avoiding it altogether? Meditation, do you sleep better? Do you watch the food that you're eating? Does exercise help? All of these things.
Yeah, everything that you mentioned helps, right? So that's really nice that you mentioned them already. But I think first and most important thing that individuals must focus on is identifying the causes of the stress, the causes or the stressors for their anxiety or feeling of overwhelm at the workplace. Now these stressors could be internal or external. Say, for example, internally, it could be something to do with the person's personality. It could be something to do with their way of working, their habits, their value system, right? That could be contributing or increasing their sense of anxiety at the workplace. It could also be external. Say, for example, the nature of work, the deadlines, the expectations, conflicts at the workplace, inability to set boundaries. There are different external factors that can be there too. So once an individual is able to identify these, it's very important that then they start working towards it, either on an individual level or with some support. Number two, like you very correctly pointed out about the lifestyle changes, sleep, nutrition, having a good daily intake of water, focusing on activities or spending more time doing activities that bring you joy. These are very, very effective in changing one's mood in general, which obviously has like a good impact on the workspace as well. Number three, it's very important, and I think this is one of the most important things that individuals can also try to, inculcate is this is to do with setting boundaries and prioritizing things, right? Knowing how you want to go about a day really helps us organize everything and have like a clear set of expectations from ourselves, which helps us not feel as overwhelmed during or at the end of the day. Then there is also an option to always seek out help and support, either from like a mentor or your manager, somebody you can trust, somebody you look up to, right? Or there's always therapy. You can reach out to a professional.
No doubt. And I'm glad that we're speaking. I'm glad that we're speaking about this, Shreya, today, because ultimately, I think the first step that a lot of people can take is to think about it and whether or not they might be experiencing it. And that in a sense, might be the first solution that they can start working on. So thank you so much for joining me today and for having this conversation. And you've certainly given me food for thought as well.
I'm glad. It was really my pleasure to be here. Thank you so much for bringing this relevant topic up.
Absolutely.
Thank you.
All right, and that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.